Hello, friends. Good afternoon. Hope you all are doing well. A warm welcome to all of you who have joined today's masterclass session. Before starting the session, I would like to introduce myself. Myself, Bhavika Rajput. I am a tax expert working at TaxPity for last 3 years. Today, we will discuss about presumptive taxation scheme and how presumptive taxation scheme helps to small businesses, professionals, and freelancers. In today's session, we will cover the following topics. Introduction, what is presumptive taxation scheme? Budget amendment for presumptive taxation scheme. Presumptive taxation scheme under section 4480. Presumptive taxation scheme under section 4480A. Difference and comparison between business income and presumptive business income. Advantages of presumptive taxation and disadvantages of presumptive taxation. Introduction. So now, what is presumptive taxation scheme? In order to boost micro enterprises in the assessment year 2017 and 18, the government introduced presumptive taxation scheme. As per the Income Tax Act, a person engaged in business or profession is required to maintain regular books of accounts. And further, he has to get his account audited. To give relief to small taxpayers from the tedious work, the Income Tax Act has framed presumptive taxation scheme under section 4480 and 4480A. Now, a person opting for the presumptive taxation scheme can declare income at a prescribed rate, and in turn, he has relief from the tedious work of maintaining books of accounts and from getting his account audited. Presumptive taxation scheme rates. For small taxpayers, the Income Tax Act has framed following presumptive taxation scheme under two sections. Okay, so first section 4480A, which is mainly for a business income, and under section 4480A, which is for professional income. If a taxpayer wants to opt out for a presumptive taxation scheme and whose transaction or whose gross receipts are from non-digital transaction, basically a cash receipt, so he has to declare 8% of his total turnover or gross receipt. Now, if a taxpayer earning or whose gross receipt are basically from the digital transactions or through any online mode, he has to declare 6% profit.
Bhavika, are you there?
Yes, Rahul, am I audible?
Yeah, now audible. You can continue.
Yes, sorry, technical glitches. Yes. So, as we discussed here from the presumptive taxation scheme rates. So, basically जैसे हमने डिस्कस किया, आप अगर आपका बिजनेस इनकम है और आपका ग्रॉस रिसिप्ट नॉन डिजिटल ट्रांजैक्शन, बेसिकली अगर आपका कैश रिसीट ज्यादा है, if you want to opt out for a presumptive taxation scheme, you have to declare 8% of your total turnover. In case if you are earning the or gross receipt are from digital transaction, basically from online mode, you have to declare 6% profit of your total turnover or gross receipt. अंडर सेक्शन 44 ADA अगर आप कोई प्रोफेशनल इनकम अर्न कर रहे हो, you have to declare 50% of your total gross receipt or a profession. Let's take an example for a better understanding. Lata Traders has owned the business and does not maintain any books of accounts. Lata Traders have opted for presumptive taxation. During year, Lata Trader has received 55 lakhs through non-digital transaction and 40 lakhs through digital transactions. Then, what will be the income for the Lata Traders for the head of business and profession? Income under business and profession. For non-digital transaction, as discussed, Lata Trader has earned 55 lakh. So they has to declare 8% profit. So which is 4 lakh 40,000. For digital transaction, Lata Trader has received 40 lakhs. So they has to declare 6% profit as per the Income Tax Act. So 2 lakh 40,000 is the total digital transaction receipt and the profit which he has earned. So the income for Lata Trader for the financial year for the business and profession will be 6 lakh 80,000. Now, moving ahead to our next topic, which is budget amendments. In budget 2023, government has revised presumptive taxation limit for financial year 2023-24 and assessment year 24-25 for under section 44 AD and section 44 ADA. So for section 44 AD for small businesses, the previous limit was 2 crore. Now it is revised up to 3 crore. Under section 44 ADA, likewise, the previous limit was 50 lakh. Now it is revised up to 75 lakhs. Let's discuss briefly about presumptive taxation scheme under section 44 AD. Provision applicable to or who can opt out for a presumptive taxation scheme under section 44 AD. So, a resident individual, Hindu undivided families, HUFs, partnership firm, but does not include limited liability partnership. A taxpayer carrying on any businesses whose turnover or gross receipt in the previous year does not exceed an amount of 3 crore can also opt for presumptive taxation scheme under section 44 AD. The increased limit is subject to condition that 95% of the receipt must be through online channels. There are few exceptions for the provision as well, as this scheme of section 44 AD is designed to give relief to small taxpayer engaged in any businesses except this following businesses. a taxpayer claiming deduction under Section 10AA cannot opt out for a presumptive taxation scheme under Section 44AD. Person or taxpayer carrying on any businesses or any agency businesses or a taxpayer earning income in nature of commission or brokerage can also do not opt for a presumptive taxation scheme. Presumptive taxation scheme under Section 44 ADA. Applicability. Now, under Section 44 ADA is basically designed to give relief to small taxpayers engaged in professionals having gross receipts which do not exceed 75 lakh, which is a revised limit as per the budget 2023. Rate of the presumptive income is based on, as discussed earlier, income will be computed on presumptive basis. That is, at the rate 50% of his total gross receipt of the profession. However, the profession can also declare the income more than 50%. Professions qualify for the presumptive taxation scheme under Section 44 ADA. So there are few professions who are qualified for a presumptive taxation scheme under Section 44 ADA. And who can opt out? Let's discuss who can opt out for a presumptive taxation scheme under Section 44 ADA. First, legal profession, as in lawyer, a practicing lawyer, medical, a practicing doctor or a doctor, engineer, architecture, accountant, technical consultant, interior decorator, or any other provision notified by the Central Board of Direct Tax, which is CBDT. Now, we will discuss about the comparison and the distinguish between the presumptive taxation versus normal business income in a practical approach. Let's take an example. A SEMA, a practicing doctor by a profession, has an annual income of rupees 25 lakh in financial year 2022 and 23. The actual expenses incurred by SEMA for running her practice amount to rupees 3 lakh. The tax liability for SEMA for financial year 2022-23 is as follows. So firstly, we will calculate the tax liability of SEMA with the presumptive taxation scheme. Income. So SEMA's income for the financial year 22-23 is 25 lakh. Expenses. As discussed earlier, as SEMA is a professional doctor who is earning a professional income is eligible for 50% of the income as a deduction, as in expenses. So her expenses is 12 lakh 50,000 as she opting for a presumptive taxation scheme. Now, after deducting the expenses from the income, her total taxable income is 12 lakh 50,000. So her tax liability according to the income, if she opt out for a presumptive taxation scheme, is around 1,72,500, which is without cess. Now, if SEMA opts out for a regular business taxation or she is opting out without presumptive taxation, her income is same as 25 lakh. Here, we have to consider the actual expenses incurred by SEMA for running her practice, so which is 3 lakh. Now, SEMA's flexible income after deducting the income from the expenses is 22 lakh. And according to her income, her tax liability which has been arised is around 4,72,500 without cess. So, hence, if SEMA follows for presumptive taxation scheme, she will be able to save of 3 lakh rupees from her tax outgo. This is how presumptive taxation scheme help small businesses, professionals, and a small taxpayer for their tax consideration. Now, let's come to the new topic. This is advantages of presumptive taxation scheme. So as discussed, this presumptive taxation scheme is basically advantages for a small taxpayer and professional earning an income. First, simplified compliances. Presumptive taxation significantly simplifies the compliance process by reducing the documentation and record keeping requirement. This is especially beneficial for small businesses with limited resources and administrative capabilities. Second, reduce administrative burden. As taxpayers under presumptive taxation scheme are relieved from the burden of maintaining detailed books of accounts, making it easier to manage their financial affairs. This simplification can save time and effort. Cost saving. The reduced need for extensive accounting and auditing services leads to cost saving for businesses. This is particularly advantageous for small businesses that may struggle with the financial burden of comprehensive compliance. Ease of calculation. The presumptive taxation approach involves straightforward calculation based on a fixed percentage or a turnover or a gross receipt, as we discussed earlier with the examples. This simplicity makes it easier for taxpayer to determine their taxable income. Predictable tax liability. Taxpayer can predict their tax liability more easily under presumptive taxation, as it based on a fixed percentage of turnover or receipts. This predictability aids financial planning and budgeting. Advance tax. This is the most common benefit for a taxpayer who is opting out for a presumptive taxation scheme. Taxpayer who is opting for presumptive taxation scheme required to pay whole advance tax liability on or before 15th of March according to their income to avoid the interest. Unlike regular businesses, if you didn't opt for a presumptive taxation scheme, for regular businesses, the taxpayer has to make the advance tax payment on a quarterly basis. Now, as every coins have two sides, as presumptive taxation has some disadvantages and limitations as well. First, overestimation or underestimation of income. The presumptive taxation approach relies on fixed percentage or flat rates applied to turnover or gross receipts. This can lead to inaccurate estimation of actual income, potentially resulting in overpayment or underpayment of taxes. no set of losses. Unlike regular taxation, presumptive taxation scheme typically do not allow businesses to set off losses from one sources of income against profit from another source. This lack of flexibility may be detrimental during periods of financial difficulty. Limited applicability. Presumptive taxation is typically designed for small businesses and certain professions. Larger businesses or those with the higher turnover may not be eligible for this and limiting the scheme's inclusivity. Opt out for a presumptive taxation scheme. Taxpayer who opts out for a presumptive taxation scheme, he is required to follow the same scheme for next 5 years. If he fails to do so, presumptive taxation scheme is not available for him for next 5 years. Now, exclusion of actual expenses. This is the most common disadvantages of presumptive taxation scheme. Taxpayer under presumptive taxation may not be able to claim deduction for actual business expenses. This exclusion can be disadvantageous for businesses with high legitimate expenses, resulting in a higher effective tax rates. Last but not the least, key points. As discussed, there are the consequences of opting out from the presumptive taxation scheme. Once a taxpayer opts for presumptive taxation scheme, he is required to follow the same scheme for next 5 years. If he fails to do so, presumptive taxation scheme will not be available for him for next 5 years. Idea filing under presumptive scheme. If you are opting for a presumptive taxation scheme, you have to declare the income and ITR 4 form. Not required to maintain books of accounts. In case a person engaged in a business and opting for a presumptive taxation scheme of Section 44AD, the provision of Section 44AA relating to maintenance of books of account will not apply. Payment of advance tax. Any person opting for the presumptive taxation scheme under Section 44AD is liable to pay whole amount of advance tax on or before 15th of March of the previous year. Applicability of tax audit. Any person opting for the presumptive taxation scheme of Section 44AD, the tax audit under Section 44AB shall not be required in case of such assessment. Deductions. If a person opting out for a presumptive taxation scheme, all deductions are deemed to be allowed. That's it from my side. Thank you for joining and attending the session.
Hello. Bhavika ma'am, can I ask some questions?
Yes, yes, yes.
As I mentioned in the chat that I'm a pro and having a business of training, technical trainings and auditing as an engineering background. And I am also involved into purchasing of shares, mutual funds, and of course, booking some profit in that.